Welcome to thestockminer.com. I'm Brian Johnson. And it appears we have this little thing on our chart called a red candle. I'm still trying to figure out exactly what that represents. We haven't seen one of those in a long time. But we did see some strength today, actually, by the bears. So we see finally a move down in the markets based off the, I guess they use the news from this weekend. For those of you that have been following me for a while, you know I'm not real big on the news actually being a mover of the markets. I do believe it can happen in certain cases, but overall, I really think it's just a reason to explain why the markets go up or down. However, the Libyan problem, apparently the oil is now a problem. The 9.5% unemployment rate makes no difference to the markets, but the oil problem in Libya apparently is a big deal right now, so we'll go with it. The markets are down today, coming off what I said this weekend, too. The futures were down quite a bit this weekend as well, and leading us to an open that, of course, gapped down. We ran up for a little while, and then we, of course, fell down the rest of the day. Interesting to note, the gap itself filled to a very, very logical spot. Those that have been through my mentoring course are kind of chuckling right now because it's uncanny how this works within the markets, actually. So we already kind of had a really good idea of if we were going to bounce. We had a couple of targets in mind, and one of those targets was hit perfectly and before the reverse back to the downside happened. So those type of strategies as a plug, yeah, I know, as a plug, are all contained in my mentoring course. It really does give you a much better idea of what to look for on not only the markets overall, but for gaps one way or the other. And let me just tell you, it's not just for day traders. There's a big perception out there that my mentoring is for day traders. Most everybody that takes my course has a full-time job. They're just looking to make a little extra money on the side, or they're looking to better protect their investments that they have right now. Most everybody that goes to the course is not going to be a day trader. They're going to be what's called a swing trader, somebody that wants to hold for a few days at a time because they can't sit and stare at a screen all day. So let me clear that up with you guys since I'm talking about it right now. All right, back to the markets. We're down for the day. Everything down pretty good, too. The surprise, I think, for me was the Dow. It wasn't down near as much as some of the other indices. The NASDAQ took a thumping today. The NASDAQ composite overall was down 77.5 points. Yeah, that's a butt whooping. So the NASDAQ took quite a thump today. Now let's dig in. Let's look at the charts and let's see if we can glean any information from this particular move today. So here we were, back up around this 12,400. I don't know if I told you guys about it, but 12,400 was definitely one of my tougher overhead areas on the Dow. Looking for this area up here to hold as resistance. And in this case it did. We had a very nice move down today, and we blew through all the other support areas. Now we did hit them, and we rested on them. But overall, the bears won. Market internals confirmed. Everything confirmed the big bear move today. So I was very impressed with what we saw today. By the bears. That's one day. We've had this before in the past back here in this area, and it didn't stick. Then we saw this. So now what we're looking for is the stick, as it were. But look what we did. Right at the very end of the day, right back into lower support. For those of you that follow me and are actually putting this stuff on your charts, I hope you were happy with that. Gave you really, really good opportunities at potential price targets if you were playing along today and were short the market. This green line I have drawn in here was a perfect setup for this particular scenario on the drop. Going to the daily, you'll also see what we saw from the bear move today, and that's we didn't make it back to the 20. The NASDAQ got below it. The SPX finished right at it or above it, and the Dow not quite there yet. So once again, still showing a lot of strength here overall, comparatively speaking, to the rest of the markets. And I did talk about this drop potentially being very volatile. We saw it back here. Look at this big red candle. Look what it led to. Look at this big red candle. Is it going to be the same story second verse? Are we going to lead to this? I would not be surprised if we saw a little bit of this tomorrow, trying to set up for this move here. But we got to remember now, things are very, very neutral for me. I'm very neutral in the markets. There's still nothing broken from a bull side on the Dow. Still very possible we can turn around and jump back to the upside. Yes, we could see the bulls jump in and buy the dip. But we're starting to see a little bit more strength than we saw on some of these previous ones, based on what I was seeing within the markets. However, point still remains that it wipes out a lot of moves all at once, and that is, look at this, 1, 2, 3 days up, plow, gone. See ya. Told you a lot of these moves, when they tend to be violent, tend to be quick. This is where, if you know how to short, or are familiar with shorting, or are comfortable with shorting, you can make a decent money very quickly, just because they move so much. You know, it takes the bulls a while to move it up, but when the bears get rolling, it doesn't take them long to drag it back down. So we'll be watching for more of this coming into the next few days, especially this 20. Really going to be watching that for some potential moves there. NDX 60-minute, this was the one that really took a thumping here today. You can see it just crashing, literally crashing through a lot of these lower support areas, breaking the 200s down here, never really coming up to retest anything major up in this area within the NASDAQ. It was very, very weak today, as illustrated by a lot of the stocks within it. Crashed through the 20, never looked back, and stayed below the 20. We got our first close now below the 20 on the NASDAQ. So next targets are going to be right down here towards 2,300. Those are the areas you need to be watching next on the NDX. This one here is the NDX 100, so the 100 strongest stocks. It wasn't down quite as much as the overall NASDAQ composite, but you can see for this particular indice, percentage-wise, it was down more. It was only down 69 points, but it was down almost 3%, whereas a NASDAQ composite was 2.74%. So we're seeing a lot of weakness, as we have now for a while, remember, in the NASDAQ 100, which is the 100 strongest stocks of the NASDAQ. That is very interesting to take note of. Seems those are becoming very weak lately. That could be a major market indicator for us. So now we're going to see if we get retests of this area here. Do we come all the way down to this area? It's anybody's guess at this point. But we are starting to break more heavy levels within the NDX itself. The weekly, same thing. Now we just started. We got a shortened week. Already into the end of Tuesday, obviously. We'll see where this finishes by the end of the week. We've seen how these candles on a weekly can change very quickly. SPX 60-minute also crashing down and through, but doing the same type of moves. Coming down and holding here. We touched here. We held here. We held here. We crashed through, we held here, we crashed through, we came down into these lower levels, and this is what I was watching coming into the end of the day. Right around this area here, I sent out an email to my subscribers. I send out PDFs periodically, giving them charts and showing them areas of potential support and resistance going forward for the day. And then today I also sent out a second one later in the afternoon about the potential end of day move. We've been seeing it, and what we've been seeing from the bulls. Here it is. Entering the last part of the day is when we typically see the bulls move in and with a load of late day buying. The selling pressure has not let up all day, but today's finish could be very telling. I'm really curious to see if the SPX and Dow will hold their 20-day moving averages, which is what I've been preaching for weeks now. I'm also watching the 1310 to 1312 area on the SPX for a hold. That's actually an area I've been watching very, very closely, and then told them we'd discuss more in the video tonight. So you can see we got all the way down to 1312.33, and that was about it. You can start to see the tails come in on these moves. So this area down here is very, very, how would you say, interesting from my standpoint. I have a little bit more information on my charts drawn in for my subscribers, so they'll see this when we get to it here later on with the subscribers video. But this held very nicely right in through here. Now what we're looking for is obviously the follow through to come. Look what we did. We poked through that 20-day moving average and just couldn't quite close below it. So the Dow, the SPX did not follow what the NASDAQ's been doing, and that is just blowing through these moving averages like they're butter. Didn't see it here. Saw a huge move down. We saw the gap here, but if we want to be a little bit more accurate, we closed this last week up here around 1343. Now we're down to 1315. Once again, look at how many candles we wiped out. 1, 2, 3, 4, 5, 6 candles, arguably 7 candles. And if you keep going back, we really wiped out 8, 9 candles, almost 10 candles were wiped out in the course of one day. The bear moves are fun to play if you're comfortable and know what you're doing. They're a blast. Yeah, I can make bears out of you guys. I know very quickly. If you're ever participating in a very heavy down move or a quick bear move, as much as you guys might love the bull side, I promise you I can make you love the bear side every bit as much. It is a lot of fun to play. It just makes things easier. I mean, when the stock's moving down like this, big red candles and such, even the pullback on the SPX was just picture perfect. We gapped down today and we started up for a little while and we turned around and started heading down. The level at which we stopped was predictable. Good entries after that point were still very predictable and easy to get into. And then from that point on, it was nothing but just follow it down. Pretty simple to do all day long. When you're following the markets, and these big bear moves are perfect for that. Bull moves are like, oh, ooh, well, are we going to go? Are we going to go? Yeah, okay. Oh, geez, are we going to continue to go? You just wonder about it. These bear moves, yeah, there's really nothing to decide there. They just go, and they keep going. Make you feel a lot more comfortable about your trades when you see big red candles as opposed to, having to play the smaller ones. From a VIX perspective, this is what we've been waiting for. So here we go. Here's the big gap up and out of it. Now, the big question is, what am I going to say next? Yeah, will it stick? I need confirmation. You betcha. That's exactly what's coming out of my mouth next. We've seen it before. Big jumps here, even big jumps here, even big jumps here. And they all resolve down. And they all resolve down. And they all resolve down. So, like a broken record, am I going to be saying that here in the next couple days? Watch for it to hold above 19. That's really, been one of my areas I've been talking about forever. Once again, this whole 19 to 22-ish area is really the bigger area for the VIX to potentially hold and or get above. So for those of you that were buying those options back here, I told you so. This is a good place to be investing in options when the VIX is low like this. Apple, 60 minutes, still plopping out of existence. This thing took another hammering today, where it opened about $7 down and then just faltered all day long. But notice what we saw: a retest of this level. I said, watch this thing below 352.50. We saw a break of that, made good money on that. Watch for breaks, especially below 345 from this weekend. We got a retest of that. Look what it did. Gee golly, it held. So another push to the downside from there. So giving us good opportunities at some tradings. We could see this thing bleed its way down into 335, maybe even below that just a teeny bit. But I would expect that we might see Apple kind of maybe consolidate here over the next few days and potentially then start to move its way back up. I don't know. Putting in new highs, maybe not in the short term, guys. Daily coming right back down and resting where? Gee, right at support. 50-day moving average holding very, very nicely. Looking to see if we'll break this 335-ish level. That would be another area to be. That would be of great concern if that started to break. So you can once again see move up, 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 and then just move down in 2 candles and be done with it. Here we are down, another $22 in a couple of days. So it doesn't take long on these bear moves to get going. In strong bull moves, I agree. Same story. Look, we can move up every bit as fast. But when things start to topple, they topple very quickly within the markets. And it's good to know how to play offense, how to play defense. If you really want to make good money in the markets, you can make money in the markets playing the bull side, but you can start to really make consistently good money in the markets, but you got to know how to play both sides. Here we are right here, held above that blue line, and not holding so far this week. So let's see where that ends up by the end of the week. FAS, yeah, it took a butt thumping too. But holding what? Yeah, I said short below the 33 area, and that's exactly what we held today. So we saw the gap down. We saw the push back up into 33, but that 33 level held, and then it was down all day long. So had a very nice pattern forming up here from the bull side. But the news, or whatever you want to call it, over the weekend made everything turn around. Once we opened up down here, was quick to see that the 33 area was going to be potentially overhead resistance, and it held beautifully, making for some very decent trading to the downside within the FAS itself. From a daily candle, same type of thing. Here was another area I was looking at below the 20-day moving average, and didn't hold. So below 32. Once again, making for a very decent trade. Below 33, below 32. Now back into these lower levels. I'm shooting for down here. I think this is very, very possible right down here near 30. Maybe even the 50 coming up. Lots of participation on what happened today. So there was a lot of movement today within the markets. FAZ, yay. We finally broke some of these overhead areas. Now can we start to talk about longs? Yes, we can finally start to at least chit-chat about them over coffee and crumpets, I guess. But you can see we did start to finally break some of these overhead levels, giving you opportunity to trade. And this one actually gave you opportunity to trade. It didn't just gap up and run away. It actually ran through these overhead lines. If you've had them on your charts, you've had good entries. Now we're back up into this $8 area, which should act as pretty staunch overhead resistance because it's the 20-day moving average. However, we get pushes above this coming into tomorrow, you bet we could see this thing push right back up into the 850 to 875 mark. That will be my first overhead target area. Ultimately, we break that. This is absolutely my next overhead target area. So you'll be watching that very closely for UFAZ players that are all probably very happy if you've been in, long from way back here. You're looking at these moves down here thinking this could be something decent. And it could. It could. But one day does not make a market. So let's wait for some confirmation and see if we can get it over the next few days. Very strong moves overall, though, guys. I will give you that. Okay, so here we are. Back to some support down in here. If you want more information on what I'm seeing and more in-depth analysis, try out the newsletter. It's a little ad to your right. Click on it, sign up, give it a whirl, see what you think. There's a lot of individual stocks on there that I had as well. One of them that I kept over from last week actually played out very well today, and I think it could be a really nice runner for a lot of people. So we'll be talking about that next. See you guys tomorrow. Bye.